tell me how well you can hear me in the chat room. Can you hear me? Can you hear me? Okay, thank you, Oscar. That's great. Hopefully I've got this microphone situation fixed. I wasn't sure if OBS was picking it up correctly. Okay, let's go ahead and get started. Microphone back on. There we go. Okay. Good morning, everybody. Looks like we got 10 listeners on this beautiful Monday morning. It's actually evening here in Bali, but I had a wonderful day. It was beautiful. Let's go ahead and get started. We will be talking about the wheel strategy. Just so you know, the breakdown is the first half hour, we'll be teaching the wheel. Then at 9 o'clock, we'll have 30 minutes before opening bell, so we'll go out looking for stocks. We'll take more questions during that time. And then at 9:30, we'll see what stocks we found, put on some positions if possible, and then we'll really get into any advanced questions and ideas. If you guys are listening and you got access to the chat room, I want to ask a question today. How long in years and months have you been trading stocks? So if you just let me know in the chat room, how many years and months have you been trading stocks? All right, so we're going to move over, excuse me, we're going to keep moving forward while you guys answer that question, and we're going to talk about why use the wheel strategy, why use options, and why the wheel strategy in particular. It comes down to three really big things, which is the risk, the reward, and the convenience. You're going to be using the same methods to be finding the good companies, and instead of buying the shares with a normal buy and hold, you can use the wheel to create monthly income and lower your downside, to create downside protection, to lower your risk, okay? And this is a strategy that you can work a full-time job and still use this strategy. It's such a low time commitment. Excuse me, tripping over my words today. Thank you, Oscar and Wayne. And I want to make sure that you guys know this, because there's a lot of, I think, myths or misconceptions about options. It doesn't have to be riskier, and you do not have to hold to expiration. You can close early, and we'll even talk about some situations where you should close early. Stocks may change, but this strategy repeats every single month. This is not go out and do one trick pony or look for it once in a blue moon. This is a strategy that you can use every month to generate income. Okay, before we go further, I want to get a quick refresher out. What are options? An option is a two-sided contract between the buyers and the sellers. So it's not between the buyer and the broker. The broker is not taking the other side of this contract. We are, other retail traders, other institutional traders. It's a two-sided contract between buyers and sellers, okay? The broker is the go-between. It allows the buyer to trade 100 units of stock at an agreed-upon price by a certain date. By a certain date, okay? For this contract, the buyer must pay a premium and the seller will receive the premium. So, for example, we're going to be using Space, Virgin Galactic, as our example stock today. It was trading at $30. This is an old example, but the May 7th $30 call would cost you about $3.50. This gives the buyer the right to buy the Space stock at $30 up to 30 days in the future without having to spend 30 times 100. Instead, he's paying $3.50 times 100. So he's lowering his capital, but he's getting all of the upside after it goes above $33.50. Now for this, the buyer must pay $350 plus the broker and trading fees, but the seller receives the $350. And when we're talking about the wheel, we are the seller, so that's our $350 coming to us. Buying options versus writing options. When you are buying options, when you are buying a call, you are creating leverage. You are getting more than a 1-to-1 ratio on that stock. You're paying less and you're getting uncapped upside. Now this is a high risk, uncapped return strategy, but the downside to buying a call is that time is against you. When you buy a put, you could use it either as high risk capped return. It is capped return because the stock can only go to 0, or you could be using it as insurance. And most of these trades are done by institutions, so insurance is probably the most likely scenario for them. But you could use it to bet on a stock going down. But again, it's very hard to time when that's going to happen, and when you buy a put, time is against you. When you're writing options, you're taking the complete opposite side of that. So we then create a low-risk, medium return strategy. We generate monthly premium. Whatever shares we're dealing in, we could also consider lowering our cost basis by using, if you were to think about applying that premium towards your cost basis. And we're creating a downside protection if the stock goes down in price. And most importantly, or very importantly, possibly most importantly, is now time is on our side, which means probability goes to our side. We'll talk about that in a second, but think about it. Remember, this is a two-way relationship. If they have a 30% chance of making money, then the other side has a 70% chance of making money. And that'll become more clear as we go forward, but I want you to focus on that. Now, the wheel strategy is not a spread. It's not an iron condor. It's a simple two-step strategy. First, we sell cash-covered puts. Then we wait. If it expires, we do nothing. We can sell the cash-covered put again. If it gets assigned to us, then we can turn around. We'll own the stock and that we've just bought at a discount compared to where we sold the put, and we can turn around and sell the stock-covered call. And it looks something like this. We write, again, a cash-covered put. We wait till expiration date. Does it get assigned? If yes, we write a stock-covered call. By the way, I'm using the words write because I think that's an easier way to learn when using this strategy instead of talking about shorts and selling. Just so you know, write, short, and sell mean the exact same three things, same thing in this context, okay? So if we get assigned, we write the stock-covered call. If that gets assigned and the stock gets taken away from us, we get to keep the premium and the appreciation. If it ever doesn't get assigned to us, then the contract expires worthless for the buyer. That's good for us. We keep the premium. And then we turn around and we write another contract using the cash or using the stock, depending upon where we are on the wheel. And it's called the wheel because it just keeps going around and around and around, generating profit. So let's jump into this with an example. That was all great theoreticals, but with an example, it becomes a lot more clear. And if I'm going fast, let me know in the chat below. But we're trying to get to our deadline of finishing this up within 30 minutes so that we can start looking for actual trades with you guys. Okay, so Virgin Galactic, we do our research. We decide this is a good company. Let's go look at the option chain. This is what it looks like if you use finance.yahoo.com. It is completely free, and it's available to everyone. You can use it on your phone. So it's a great resource to go look up options because it doesn't matter what platform you're using. It'll look the same if you use the finance.yahoo.com. So if we look at the May 7th strike, if you come down here, you'll see between the 30 and the 31, the colors change left and right. That lets you know that that's about where the money is. Because remember, at the time, this is a $30.50 stock. Okay? Now, we could sell the put at the $30.50, and you would generate premium to do that. But you wouldn't have much downside protection. You wouldn't have much safety. So I want you to focus up here on the $27 strike. We can sell the $27 strike possibly for $1.65, and our break even will be below the $27. So even if the stock jumps up and down, moves round and round, it won't get assigned to us unless it goes below the $27. So let's continue forward, and I want to compare this to a buy and hold. Most people think the buy and hold strategy is the safest strategy. Well, what if I told you the wheel strategy is safer than buy and hold, and it generates monthly income? Whereas if you do a buy and hold, the stock goes down, stock goes sideways, you get no profit. With this strategy, whether the stock goes up, goes sideways, or goes down a little bit, you'll actually generate profit while being safer than a buy and hold strategy. And this is why I love this strategy. And this is why when people say that options are risky, they don't know what they're talking about, because it depends on the strategy that you're using. This is literally a strategy that is safer than buy and holding stocks. Literally safer. And I'm going to prove it. I'm going to show it to you with numbers. Okay? So we've created 6 different scenarios. If the stock goes up, if it goes sideways, if it goes down a little bit, a medium, or a lot, what happens? We're going to compare to a buy and hold. Let me know in the chat room if my sound's still working great, you guys are still paying attention. Everyone's quiet Monday morning. All right, so on the buy and hold, you have to buy 100 shares times 30. Okay, you're putting up $3,000. But scenario A is great for you. The stock goes up 10%. You're going to make $300. In scenario B, the stock goes sideways. You wasted your time for 30 days. You make $0. Option C, scenario C, it goes down $3. You lose $300. Option D, of course, you figured this out by now. Down $450, you lose $450. Down $6, you lose $600. And then down $7.50 because you have a one-to-one relationship with this stock times 100 shares. Every dollar you lose is $100 that you're losing. Every dollar that the stock goes down. What happens if you instead sold the $26 put, and we're going to say you collected $1.30 in premium? Okay, your break even. This is important. Your break even is not 26, it's 24.7, because you're going to take the strike price, subtract the premium, and that is the number that the stock would have to go down to just for you to break even. And so this is what happens. Okay, if it goes up 10%, scenario A, the buy and hold guy does make more money than you, almost 3 times more money than you. Remember, he has a one-to-one relationship to the stock, so he gets all of the upside, whereas we've capped our upside to the premium. We're only going to get $130. Now, there's actually some good news here. If it does go up within the 30 days, it should give you the option to close early. So yes, you would only still make up to $130, but you'll be making it faster. You won't have to wait 30 days, which means your APR will go up. Let's keep moving. Let's say it goes sideways, because now this is where the strategy starts to show its strength. If it goes sideways, Mr. Buy and Hold made $0 and had, what was it, $3,000? Am I doing that right? No. Right, yes. Sorry, Monday morning, 8:30 here at night. Right? You're putting up $3,000 to make nothing over 30 days. Whereas I'm putting up $2,470 times 100, so $2,400, $2,470, right? So almost $530 less at risk, and even if it goes sideways, I'm going to make $130. All right? Well, let's see. Type here, can you guys still hear me? Chat room is so quiet today. I need your energy. Let me know if this is clear, if you guys are understanding everything, okay? Because this may seem a little boring. I'm not super pumped up and excited like I've been on some of my live shows, but this strategy is so powerful, and it's strictly just better, in my opinion, than a buy and hold strategy, unless you're dealing with high growth stocks where you can make a ton of money, okay? Moving on, scenario C, and you can still use this strategy on high growth stocks. I've been doing that for about a year now and doing fantastic. By the way, just for clarity, this might be your first time to the show. I took an account, $25,000, and in less than a year, using only this strategy, I've grown it to $43,000. That is a massive return. This is not a weak strategy. This is not a low earning strategy. You can make a lot of money with this strategy. You can even use it for monthly income. All right, let's keep going. I want to get through this. And then we can go find some stocks, and then hopefully I'll get my energy up. Scenario C, down 10%. Mr. Buy and Hold loses $300. Guess what? 27 is not below our strike, and it's not below our break even. We still collect the full $130. Isn't this amazing? Let me know in the chat room below. This means that if the stock goes up, we make money. If the stock goes sideways, we make money. And even if the stock goes down 10%, we still collect $130 full profit. It's only when it goes below the strike. Now we're looking at scenario D. It goes to $25.50. We're still above our break even, but we're between the break even and the strike. We lose a little bit of profit. We've lost 50 cents below the strike. Therefore, we lose $50 of our premium. We still make $80, and we may not be assigned. We can close early. We might get assigned. If we get assigned, we turn around and sell the stocks immediately. We collect $80. Guys, listen to this. The buy and hold guy just lost $450, whereas if you use this strategy, you make $80. That's a risk difference of literally $530, losing $450 or making $80. Which do you prefer? Okay? Scenario E, now we both start to lose money. But guess what? Buy and hold guy loses $600 if it goes down to $24 a share. We're only down 70 cents from our break even. We only lose, remember this is times 100 shares, so we only lose $70. Come on, do you want to lose $600 or do you want to lose $70? Let me know in the chat room which do you prefer, losing $600 or losing $70. And then option F, this is bad for everyone. This is a massive blow to the company. It's down 25%. Mr. Buy and Hold loses $750. It's now well below our break even of $24.70. We're almost $2.20. Yeah, we are $2.20 below it. You lose $220. But there's a silver lining. If this stock goes up just $2.20, you break even. What has to happen for Mr. Buy and Hold? He needs to get $7.50 higher just to break even. Which of those is more likely? Right, it's a lot more likely to get up $2 than it is to go up $7. Well, what happens if it does go up $7? How much does Mr. Buy and Hold get? He breaks even. That's it. He doesn't make anything. If it goes up $7 from here, it'll be at $29. Remember, our break even is $24.70. We'll actually make over $500 on this trade just for it going back up to $30. And yes, folks, it's a little bit rare, but this actually does happen. You can make more money getting assigned the shares and then getting the appreciation when it goes back up than you do in the premium that you collect up front. So you get the appreciation, you get the downside protection, and you get the monthly income. This is strictly a better strategy in my opinion. Oh, come on, there we go. So how do you do the calculation so that you can do this yourself? It's actually super simple. This is like a basic calculator, no scientific calculator necessary, okay? You take the strike price, not the stock price. Those are two different things. You take the strike price that we're selling, okay? You look at the premium. You type in the premium, $1.30. You take the strike price and divide it. So $1.30 divided by 26. Remember, 26 is the strike price. That gives you your percentage. 0.05 is a 5% return in however many days you're doing it. If you want to calculate APR, you got to figure out how many times could you repeat this cycle. So this was 30-day stock is what we were looking at. Sorry, a 30-day contract. So we take 365 and divide it by 30. That's possibly 12.16 times in a year. Multiply that by your 5%, and you get a almost 61% return. This is basic math. It may not be exciting to you, but think about the return that you're getting. A 61% return on a strategy that's safer than buy and hold. Now, I'm not a big fan of people that start with compounding charts. They can be misleading, but this is reality. We're not talking about generating 20% a week or 20% a month. We're talking about 1 to 5% a month. If you had $10,000 and you compounded that for a year, this is what you'll get. At 5%, now normally you would think 5 times 12 is 60%, right? That's what you're getting. No. With compounding, you're going to get close to $8,000 which is an 80% return. The compounding is very powerful, and it's more reliable. You're collecting premium every month. Doesn't always happen, but it can, and it has for a large degree. Now, I'll talk about my own personal success, okay? I don't know what other people are getting with their own strategies. I'd say over 90% of the covered puts that I sell never get assigned to me. That's what I'm saying. If I go out and I sell 10 covered puts, 0 to 2 of them each month will actually get assigned to me. 0 to 2. It's unlikely. It's very unlikely that I've ever had more than 2 stocks ever get assigned to me in a single month. And if you calculate that out, the returns are phenomenal. And then remember, once they get assigned to you, it's not the end of the world. That's just the next step of the wheel because you turn around and sell the covered call. Now, I was going to do this in the presentation mode, but we'll do this one in the presentation mode, and then I'm going to switch to Tastyworks and show you guys the covered call, and we'll talk about that. Okay, so this is what it looks like if you're in Tastyworks. Here we have Virgin Galactic. You type space up in the top, SPCE. Here you see Virgin Galactic. You see the bid, the ask. This is what the stock was going for at the time. And in the middle, you have all of your different times that you could choose. Now, we chose the May 7th. We wouldn't actually trade this as on the wheel because May 4th is the earnings day. Okay, we like to avoid those. But for the example, it's okay. This is what it looks like when you click on May 7th. It opens up the option chain. Looks very similar to what we saw in finance.yahoo.com. Okay? And if we come to the $26, actually, I just realized in our example we talked about the 27, and then when we switched to the 26 by accident. I need to fix my slides. But anyway, you come to the 26. It's actually a little bit better for safety than the 27. Okay? And you can see that it last closed at $1.34. So we can put that in. We click on the bid. Now, notice these columns: bid, ask, mid, last. Okay? If you want to sell, click on the bid number, not the ask number. And this should light up red and S1 to let you know that you're selling one. There is echo in the audio. I'm not sure how to fix that. I will, maybe if I lower my... Okay, can you still hear me? I turned off one of the audio inputs to see if that fixes anything. Please let me know if you can still hear me, which is very important. And is the echo fixed, or did that not fix the echo? I'm going to keep going in case everything's fine. Thank you, Anand. Thank you. Cool. We'll get this figured out. Audio is such a pain with live streaming. Anyway, so here, we want to sell the $26 put. We make sure that we click on the bid column. We make sure this lights up red, S1 for selling. Down here in the order, you can also see -1. -1 is good for us. We're selling. Now, a lot of people, they say, Bud, what delta do you use? What delta do you use? And that's great. Delta's fine. For those that don't know, delta will be some number up to 1. Some number up to 1. Thank you. Audio is low. I'm going to turn that up. You guys let me know if it gets too loud. Okay. Okay, I'm going to say that again then. Sorry, we're dealing with these audio issues. Got different programs doing different audio stuff. They have different settings, and we just got a microphone to work. Anyway, I'm going to go over this real quick again. We're clicking on the $26 strike. We're clicking on the bid because we want to sell it. Should light up as red and S1 because we're selling. Okay? You come down here in the order just to make sure, you'll see -1, and you should see CR. CR means credit. We are selling it, so we want to earn a credit, not a debit. Debit means we're buying. We don't want to buy, we want to sell. We want to make that money. Okay? Right here, where it says limit price, you can type it in, or you can click on this slider and choose the price that you want to sell it for. Now, again, I was saying, but with low audio, is a lot of people ask me, Bud, what delta do you use? What delta do you use? Okay? Okay? And most people who use the wheel strategy will look for a delta of 0.3 to 0.2. It can also be displayed as 30 to 20. It's the same thing. It's either a value between 0 and 100 or 0 and 1. It's just a percentage type of thing. Okay? Now the delta is the success rate of the buyer. If he was to buy it at a delta of 0.22 or delta 22, he would have a 22% chance of being profitable. For us, it's the opposite. We would have a 78% chance. Now here's the reason why I don't use delta, you might notice. It's really just an approximation for probability of profit. It's not as accurate as the calculation of actual probability of profit because it changes on the price, IV, all this other stuff. So I don't look for deltas. A lot of people do. You should know what it is when you're talking in chat rooms, okay, when you're on forums, you're on Facebook, blah, blah, blah. People will talk about what delta they look for. That's fine. But it's really just a step before pop. Pop is what you really care about, which is the probability of profit. And I like to make sure that I always have 70 to 80% probability of profit. If I have over 80% probability of profit, over 80% pop, I'm probably not being aggressive enough. I could probably get some premium. I might be leaving some on the table. Or maybe I'm just not really that excited about the stock or its price action. Okay? But that's why I don't use delta. People ask, like, what delta do you use? What delta is your strategy? I use pop. It's just a little bit more accurate. Okay? Here, if you click, if you're in Tastyworks, you'll see in the top left you can click table. But if you click curve, it will then show you this diagram basically, and it will show you as long as you're above this price, the 26 and up, you get full profit. If you're between 26 and 24.70, it's showing you gray, which means you get reduced profit, but you're not losing any money. And if you go below that number here at the 24.69, you're going to start to lose money. Okay, or actually you'll get assigned shares. You don't know how much you're going to lose, but that's when you start to lose value. All right, moving forward. And this becomes, by the way, this becomes more important as you start to do more advanced strategies. But even as you're new, looking at this again might help you figure out where you are with that stock. This is what it looks like if you click send and review. You're going to get a review screen. It's going to look just like this. It's going to show your buying power. It's going to show the price that you put in. It's going to show your credit. It's going to show your fees. Notice we're only paying $1.14 in fees. There's other places that might be cheaper than Tastyworks, but I'm going to tell you, the fees don't matter as much as the UI and the fill rate and the ability to roll your options. Tastyworks has all of those much better. I've used other platforms. I put in the same order on that platform versus on Tastyworks, and I got $6 better per contract on Tastyworks, which makes up for that $1.14 fees versus what I might have paid on those other platforms. Fill rate is much more important. If you don't have a platform or you're interested in switching to Tastyworks, I do have a referral link in the description below. I appreciate if you use it. I get maybe about $75 worth of free stuff. I'm trying to get a Tesla car out of it, but I need 500 of you to click on that link and start trading in Tastyworks. Just remember, before you put this through, you should see -1 here, and you should see credit. You should see credit. If you're seeing debit, you're doing something wrong. Okay? Now, really important, if you've never done one of these before, Bud, how do we cancel? You come over here to the tab, you'll see activity. You find the trade that says pending. You right-click, and you click cancel. So if you did anything wrong, if you change your mind, maybe you're looking at the price action at 9.25, the stock price is moving wildly, you want to change it, want to wait, make sure you know how to cancel. Very important in every platform. More important than knowing how to put it in is how to cancel. Anyway, sorry I'm a bit tired today, guys, but I hope I did a fantastic job. If I did, please consider tipping. Please consider joining the Tastyworks platform using my referral link. And let's go ahead and, I didn't mention this, but let's go ahead and hand out some free Discord invites if you guys want some. Let me know in the chat room right now, and I will pass out some free Discord invites. We only give these out during live events. They will only be valid for about an hour or half an hour, so you must sign up with it. But when you're in the Discord invite, you'll get access to chatting with me and other other wheel trading strategists, and you'll be able to get some help. You know, if you need help figuring something out, you'll have a chat room to talk with. Plus, we share tips. We share, hey, what about this stock? What about that stock? Oh, I'm going to do this trade. I'm going to do that trade. Being part of the Discord group is actually super valuable. if you guys need or want a Discord invite, let me know in the chat room now, and I will send it to you guys. If not, I'm going to just keep moving forward, and we're going to start looking for some stocks. Okay, Oscar. There you guys go. I know we're on a bit of a time delay here. I am in Bali, so we don't get the super live active chat responses. Okay, I'm going to start looking for some stocks with you guys. I've already started to do that a little bit here. And I'm going to take a breather and a drink. All right, 1, 2, 3, 4, 5, 6 of you. Thank you guys for using the chat room. That Discord invite is right there. You have 30 minutes to use it, so it will not work during a replay. You must sign up within 30 minutes of clicking on that link, or 30 minutes since I posted that link, I should say. All right, so I've been going through, I picked out some stocks today. I want us to go look at them. Excuse me. Oh, man. I need to go look at them together. Yeah, by the way, Saturday, I started getting a really sore throat, and I was worried that I'd have to cancel this live stream if I got any worse. But I'm getting slightly better. It didn't get worse, so I decided to go ahead and do this live stream because we've been planning for it all weekend, and I really didn't want to cancel on you guys. But that sore throat is starting to catch up with me, so let me get a lozenge here. Did you guys learn anything? Is this helpful? And for the record, yep, Anand, we're going to get into that. For the record, I'm going to keep updating these slides, so even if you already know the wheel, or if you've already been through the 30-minute spiel, we're going to keep adding new twists and new strategies to it. All right, I told you I was going to do selling a covered call. So let's go ahead and go through that real quick. It's really simple. Yep. If you're doing, let's say you get assigned the stock. The in-the-money price is going to change. You find a date that's 30 days, well, I like to find 30 days out. It's up to you, okay, how many days out you want to go. Some people like weeklies. I don't think you generate enough premium with that. And you want to make sure that you choose a strike price, when possible, that meets 3 criteria. Number 1, you hope that it's at or above your break-even. Remember, in our scenario, our break-even would be at $24.70. So I might come and look at the $25 call. And I want to make sure that I'm earning some premium with that. And I also, if possible, I want to get some appreciation out of that. So I might want to move that up and down. By the way, you can just click and drag on it. And make sure you click on the left side. That's where calls are. Puts are on the right side. You click on the bid. And if you have the shares, then this will be a covered call. If you don't have the shares, then you would be forced to buy the shares and then make this trade as a covered call. But we're using this scenario as if I'd already been assigned the shares. Now this premium that you see here, by the way, is not going to be accurate. If that price comes down, this premium is going to change because, well, the price of the stock changed, and it's going to be closer to in the money, but it won't be in the money, or at the money, I should say. Okay? But general rule of thumb is you might get something close to what you're getting now, but less. So right now you could sell a $29 call if it moved back down. Sorry, you could sell the $29 for about $3. Maybe you could sell the $26 if it was $26 strike. $26 stock. Maybe you get $2.50 or $3 selling it later. There's no easy way to figure it out. There's too many variables, including IVX. Anyway, so one of the ways that you can go out and find stocks is there's a great website, etf.database.com. Go and find a sector that you like or an ETF that you really like. So, and this is just one of the ways. There's scanners and all sorts of ways. But what I want to focus on today is I want to find some stuff in sectors. Oh, why is ARC not coming up? Anyway. Not sure why that didn't work. you guys have any stocks that you guys want me to look at, post them in the chat room, and I will start to do that with you guys. And in the meantime, I'm going to start looking for stocks that I want to be trading on, and I really am interested in the genomics. I think, because when you do the wheel trade, you want to find stocks that generate good returns, but you also want stocks that you wouldn't mind holding for a long time. Now, typically speaking, you have to think about how much capital you want to tie up with this. So if you're looking at this with me, you're seeing that I'm looking at the ARK Invest holdings, and it sorts it by weight, but a lot of these are above $100 a share. And I don't want to tie up that much capital, even in a $40,000 account, so I'm going to start looking at stuff that's under $50, under $100. So let's take a look at PACB. I'm going to do this in Yahoo because you guys can follow along in Yahoo. Pacific Biosciences of California. We're going to take a look at their profile. We're going to take a look at their options. And I'm going to take a quick look at their numbers here. Market cap is $6 billion. I'm going to change from daily to yearly on this chart. We can see they're not at an all-time high. I like that. When I'm doing the wheel, I do not want to be at an all-time high. I actually like that we're kind of in this this fair price channel right here. Let's zoom in a little bit. If you come down here, and I'm not huge on the technicals, okay, but we're already looking at it, so I'm going to go over it. I can basically tell you that if I were to sell the put, I'd want to be somewhere between the 25 and the 27, because this is going to be pretty safe compared to its relative trading range. I'm not big on, like, you know, all these technical analysis, double tops and head and shoulders and all this stuff. You do that, in my opinion, you do that after fundamental analysis. You don't do that before fundamental analysis, okay? And you use that to time your entry and exits. I'm not a big fan of day trading. I'm making massive profits every year using a safe strategy. I don't want to do that. Okay. Now we're going to come and look at the options. And the first thing I'm going to calculate is at the money. We're not going to sell at the money, but I want to know what at the money is in terms of percentage so that I know if it's even possible to really do this. So I took the strike price at the money divided by the premium. We got 11%. This is really good. This is really good because it means if I'm getting 8, 9, 10, 11% at the money, then I'm going to be able to find 5% out of the money at a safe rate. Do you guys understand what I'm saying? Let me know in the chat room if you need me to explain any more of this. Okay? Especially this math part, because you're going to be doing this a lot. You're going to be constantly checking prices. Okay? So let's look at the 26. I get about a 4% return at the 26. 27 is oddly right at the same price as the last price at the 27. Let's look at this in Tastyworks real quick. What was our thing? PACB. And this is May 21st. So this is more than 30 days. So I'd like to get 6% or if possible instead of 5%. 39 days out. We come to the 27. Yep. Our last is pretty close there, but there's a 25-cent difference between the 27 and 26. When we look at the 28 real quick, 1.45 divided by 28, whoops, calculator went crazy, $1.45 divided by 28. We're going to get our 5%, 39 days, not as high as I'd like, but we're also going to get a break even, 28 minus $1.45. We're going to have a break even of 26.55, okay? And if we calculate that with today's price, 31.60, there's a bit of a spread, but we'll count it at the bid. We're going to get 84, but then invert it. This means, and let me know if I went too fast and you want me to do this again, just for you, or tell me where you got less, let me know. But this means that if I sold the 28 at the bid at $1.45, I would get about a 5% return. I would also be 16% out of the money. I have a break-even percentage of 16%. My downside protection. What this means is even if the stock were to drop 15.5%, I would not lose money. Now, when it gets to the 28, I start losing value, but it needs to go lower than that. And I don't lose any money until it actually gets 16% below the money. So I like this stock. I think we're going to put in a trade on this stock. I'm going to verify it one more time. Actually, need to do a little bit more research on it, but I like doing trades with you guys. Pop is 70%. That's a little low, but it's acceptable. Okay, we have a max loss, which is the cost of 100 stocks, to be $26.55. That also, I'm too tired to think about that. That's also a quick way to know your break even, is you just look at the max loss, and then you divide by 100. So obviously $26.55 is $26.55 is our break even. Okay. Spread is 145 to 175. The last was done at 165. We can probably squeeze this out to 150 or higher. So I'm going to move my slider up. I'm going to try and do this at 155. Notice our delta and our pop pretty close together. Your theta, by the way, is basically how much money you're making per day as time decays. That's known as theta decay. Okay, we're doing the review here. 155 in credit, 153 after fees. Okay, reducing our buying power by 1,000 because we do have. By the way, margin works on selling puts because it's calculating as if you buy the stock at the end of it. Now, I'm going to put this order in, but we're going to keep researching it and then decide if we're going to cancel. All right, so quickly, what do? Pacific Biosciences of California designs, develops, and manufactures sequencing systems to resolve genetically complex problems, blah, blah, blah. The system which conduct, monitor, and analyze biochemical sequence reactions, consumable products, including single molecule, real-time, lots of smart stuff. All right, I'm going to show you guys another website I like to use, wallmine.com. I already told you, before we even started looking at the stock, I want to get into genomics. I have a lot of trust for ARK Invest. I think they're one of the better ETFs out there right now. They're practically a managed fund. You're basically getting access to a hedge fund in the form of a ETF. So this site I'm looking at now is called Wallmine, and this gives me basically the same information as Yahoo, but it makes it a lot easier to go through it very quickly. Holy smokes, that is super high institutional ownership. That's a lot of people looking at the stock with a lot of degrees that decided that this is a good stock to buy and hold for a long time. So they like it, which means I like it. Revenue quarter over quarter is negative. So this company has not turned the corner on being super profitable yet. Yeah, I wish I could see. Okay, we don't have time for that. Anyway. February, we've got some insiders selling. We've got the accounting officer selling at $40 a share. Today we're at 32. We're not too far off, but we have a director. Director could be anybody selling at $50 a share, $47 a share, $39 a share. So these guys felt it was overvalued at that price. We see some options at $4 a share, which means that they were actually exercising and getting the options, not selling it. They wouldn't be selling shares at $4, but this is trading at $50. So we have some directors that are finally coming into their options, and they were basically buying them at $5, $6 a piece at the time. That's not super bad, but it's also not great because there's a lot of incentive for them to sell it. Okay, why does it say quarter over quarter was down 2.5%? Whereas if I come down and look at the balance sheet, we see quarterly, December, they were at 75 million. When is their earnings? Sorry if I scroll up fast for this. Earnings date is May 6th. Oh, no. April, May. Did I not see that? I totally skipped over that. Yeah, okay, I'm going to cancel this trade. Sorry, guys. Not going to do that trade. We're going to keep this on our watch list, and we're going to look at it after earnings. I don't like to trade around earnings. Okay. Marilyn Burns. Okay. Yeah, let's talk about this. So you're probably, as I was scrolling down, analyst rating, price target, $14, current 32. This stuff is usually, it depends which stock you're looking at, but this stuff is usually so out of whack that I don't give it any credence. Okay? Especially on this one, because you can't, as far as I know, you can't really click on it and figure out which analysts are giving it which values. Anyway. I'm going to finish doing a quick little research on this one, but then we're going to keep going because their earnings are too close. That is the downside of trading the options this month, is there's so many earnings coming out and unfortunately, makes you want to pass by it. So what I'm doing now, for those of you watching, is I'm taking the total liabilities, dividing it into the total assets to get a percentage, so that I know how much debt they have in terms of a percentage. Some of you guys use quick ratio, that's fine. I like my way because it just works for me. It's super fast, and it gives me a number that makes sense. 20% makes a lot more sense to me than the quick ratios. And what I'm looking for here is how far away are they from 70%? Because if they're getting close to 70%, it's going to get really hard for them to borrow money. So I really like it when they're really far away from 70%. And this is a good company. 20% is very healthy. 0% means they're not being very aggressive with their lending and their money, and I actually might want to skip them and ignore them. The 20% is super healthy. So I really like this company so far, but the earnings coming out is what's going to make me not trade this right now. But that gives us more time to go do the research. Because this is the thing. I didn't say this to you guys yet. The wheel strategy, the way that I use the wheel strategy, I think 1 month last year, I did 30 trades in a month. So that's actually one position a day. I didn't open them one position a day. Obviously, I opened like 5, 6 a day. Okay, I tried doing that, and then I had 2 or 3 get assigned to me. So I don't use that strategy. I really like the wheel strategy, doing only 1 or 2 positions a week, because I'm only trying to get to 8, 10 positions a month. I just want 8 to 10 active positions, and what's great is when you get a stock that works, whether the price goes down, price goes up, you can keep wheeling it. You can keep doing the wheel. This is a very reliable strategy. All right, let's go to the next one on the ArcGen thing, and we'll look at the earnings date right away so that we don't run into the same problem we just did on PACB. So now we're looking at RHHBY. Earnings date is not on Yahoo, so let's check Walmart to see if it's there. Let's check Tastyworks. What did we say? RHHBY. Come on. RHBBY. Because sometimes, it's weird. Some of these sites sometimes do not. Okay, well, here's another good thing. We don't know the earnings, so I was looking for the earnings. We also know that there's no options on RHBBY, so we don't need to spend any more time doing any more research on this because we can't run a wheel on something that doesn't have options. All right, next one. TAKUN. That's going to be another ADR, so we might not have options on that. Let's check it. By the way, if you guys have any questions, shoot them into the chat room. Somebody was asking for a Discord invite. If you don't see it in the chat room above you, just stick with us. We'll give another one out as we get closer to the bell. Okay, TAKUN. If that was that doesn't look like the right one. Just Eat Takeaway. No, that's not the symbol that we want. Okay, let's try and search by the name. Takeda, just TAK. Okay, they're just telling us UN because it's a United Nations one. All right, do they have options? Okay, good, they have options. We can go look at Takeda. So we're going to look at TAK for those following along. We're going to look at their earnings. Earnings is May 12th. No. All right, so we're going to skip this one. We're going to come look at it after May 12th. All right, then we're looking at CDNA. It's $70 a share. I don't know if I want that. Let's just take a peek at it real quick. I'll use up a lot of my portfolio. They do have options. And earnings April 29th. There we go. We're running into the earnings wall, unfortunately, this month. All right, I got some more stocks for us to look at. IOVA. I've got some other stuff on my list to go look at. Earnings. May 2nd and 6th. No. PSTG. If you guys got any, if you guys have any stocks that you want me to look at, you let me know. If you have any questions, you let me know. I saw a question and then the question got retracted. If you want to ask it, it's okay. No one's gonna. This is a great place to ask, man. Man or girl? May 25th, May 30th. Anand asked, why not take the earnings? Well, that's a great question, and thank you for asking. Earnings are a big catalyst, and I like to trade the wheel when away from any type of catalyst, because here's the basic idea. Yes, Basker, we'll look at Mar and Wright. That's a good idea. Here's the thing with earnings. If earnings are good, the stock price could shoot up in value, and that's great because then we can close early. But if earnings are bad, then the price is going to come down, and it's going to break our wheel. We're going to own the shares, and we're going to own the shares at a new trading range. We're not just going to own the shares at a discount. When earnings are bad, the stock is going to go down to a new trading range and discover its new normal price. Okay? There's nothing wrong with that, except that we're not getting any action. We're not getting the benefits of that. We're getting only a 5, I'm saying only 5%. 5% a month is a lot. But when it's around earnings, you'll make more money if there's a huge move using a straddle or some other strategy. So it's just not worth the risk. The risk-reward ratio isn't worth it. That's basically why. If it doesn't make sense, or if you want more information on that, let me know. Marcin R. asks, do you hold your options till expiration? No. Technically, no. But I will close. So here's the idea. As soon as we put in an order and it gets filled, I will immediately put in a good till closed buy for 99% of the max profit. That way, if it ever hits it, we'll take a look at NEO. That way, if it ever hits it, oh, good. NEO we can actually trade on because earnings are farther out. So let's take a look at this one. And I know a bit about the company. So, Marcin, no, you never want to hold fully to expiration date because options close at 4:30, after hours trading continues, and you risk getting assigned with no way to change your order, with no way to exit the option, which is crazy. So you always want to close even at 99% of max profitability. How do you choose the strike price for selling puts? Let's do that with NEO. Let's just pretend we're doing an order with NEO, and then we'll research them a bit. I haven't looked at their financials. Okay, so first off, let's take the 285 divided by 38 to find out what is the percentage at the money. It's 7.5. So we're not going to get too big of a discount in terms of safety when we look for our 5%. Let's look at $1.61 divided by 35. That's about right. That's about our 5%. There's a little bit of squeeze in there. So let's consider this. Let's consider selling the 35 at $1.61. So yes, how do you choose? Now, are you asking like, how do I, you're not asking like technically how do I click it? How do I choose? I want to try and make 4 or 5%. My strategy, by the way, everything I do is for me. You might have a totally different situation in your life in terms of retirement, income, age, etc. Right? You know that. Not a financial advisor, right? But for me personally, I'm looking for 4 to 5% monthly return, okay, on a good company in a good sector, and I want to have 15% break-even percentage. In other words, I want my break-even to be at least 15% away from today's trading price, so that if I ever do own the stock, I have a 15% discount. It's like walking into a store. Do you want to buy it full price, or do you want a nice 15% discount on whenever you're buying a pair of shoes or anything else? You want the discount. Same thing goes here. So let's go ahead and run that here. So if we look at our max loss, if I made this trade right now, my break-even would be 33.39, and I'm going to divide that by today's trading price, which is 37.97, and then we have to invert it because it gives me 88, which is not the real thing. The inversion would be 12%. So if I made this trade right now, I'd get less than 5% ROI, and I'd have a 12% break-even percentage. By the way, I don't know how many other people teach break-even percentage. I think I might be one of the few, if only, people that teach break-even percentage when they're talking about the wheel. It's such a powerful and important part of my strategy, and nobody else talks about it. It's crazy. You guys are so lucky to be on this channel with me, whether you believe me or not. I'm not kidding you guys. This is an okay trade. If I wanted to do NEO, this would give me a 69 pop. We just figured out I'd have a 12% break-even percentage. It's not great. I'd have a less than 5% return in 32 days. It's not great. This is not a great trade, personally. But if you're really bullish on NEO, NEO is owned by China. I mean, literally by the Chinese government. They're supporting NEO as their EV company, so you're probably pretty safe in terms of that. Let's look at their financials though. Let's take a look at NIO's financials. So this is an okay trade based on the percentage and break even. Walmart, why do you show me crypto ahead of stocks? Nobody's going to use crypto, I don't think. Anyway. We had the MACD or SMA, anyway, whatever, I can't think right now, crossed over, so we had a change in the normal price. The normal price is now coming down, and we're trending down. So we really kind of want to wait for these to close the gap here a bit, if you believe in this technical stuff. And the MACD is a little bit more accurate than, head and shoulders type of stuff. We're looking at a $61 billion company. Revenue quarter over quarter is amazing, 133% quarter over quarter if you believe the accounting coming out of another country. Institutional ownership is 36%, that's good. Profit margins, they are not profitable, it's not a profitable company. Does not show me insider trading, does it? Does not. I don't think it shows me insider trading because they're a foreign-owned company. Okay. Analysts say it's a $38 stock, whatever. They are still losing, and we got to run the calculation for yen. I don't know what that is in dollars. But anyway, we can do the calculations in yen. It won't really matter. It's all percentages anyway. Let's take their 22.7 divided by 54.6 for their debt ratio. They've got 41% on debt. If we take their cash on hand, which is 38, and we divide it by how much they're losing every quarter, which is 1.4. Did I do that right? No. Yes? Yeah, I did that right. Okay. Assuming things stay, excuse me. Jeez. Assuming things stay the same, you got 27 quarters before this company runs into real problems with cash flow. But that's a really long time. I like to make sure that they have cash on hand at least 8 quarters in the bank. So the debt ratio on this is good. The cash on hand is good. The quarter-over-quarter revenue is good. Institutional ownership is good. The technical analysis is not good. Do with that what you will. And the ROI trade on this was okay. So I would say that this is an okay trade. This is not a 5 out of 5, maybe not even a 4 out of 4. A 4 out of 5. This might be a 3.5, 3.7 stars out of a 5-star Michelin restaurant review, right? This is an okay trade. Now, here's the thing about okay trades. If you really believe in this company, then you really don't mind owning the shares, right? And if you don't mind owning the shares, then getting 4% monthly return or a 15% discount on the price, both of those are big win-win situations, which is why I love the wheel. And if I love NIO, then I would do this trade. I own so much Tesla that I'm not interested in doing NIO because I have enough exposure to EVs and I have a better EV company. Let's go take a look at Shopify. Shopify is a very expensive stock. We cannot do that one. It would break my account. Roku, very expensive. No. I'm just going off of my my own watch list here, which I got written down. If you guys have any more stocks you want me to look at, if you have any more questions, I'm here for you guys live. And we'll give out some Discord invites in about 10 minutes after the bell. We'll do about 5 minutes after the bell. You guys can watch me as I go through these stocks that I wrote down today to go and look at. I haven't looked at them at all. I'm doing this with you live because I figure if I'm going to do a live presentation, I might as well show you all the steps. WLO. A lot of these are just out of the price range. And so you'd have to use a different, or I would have to use a different strategy. Oh yeah, Mara and Riot. Oh, I looked at Mara and Riot. Their earnings are coming up. That was the problem with them. Their earnings are coming up. And so I skipped them. By the way, I like Riot and Mara. I like both of them a lot. You can earn a lot of premium. IV is always high. You don't see, that's the thing with Mara and Riot. The IV is always high, so I don't need to trade around earnings. Why trade around earnings if the IV is always high? Just wait for earnings to get past it. Yeah, yeah, I would totally do Mara and Riot. I actually have another company that I'm buying and holding shares in the same space that I think could 4x. So I kind of don't want any more. I don't want too much more shares in that space with Riot and Mara in case until that one plays out. But the earnings are coming up, so if what I'm doing is I'm going to wait for earnings, and you guys have to decide whether or not. Here, do you guys care about earnings? You want me to just analyze one for you guys, even though I'm telling you I wouldn't do it around earnings? Boozy, never heard of that one. Let's take a look at Boozy. Marilyn asks, how close to earnings should I avoid trading? Well, I definitely don't like to go over it. That's like getting a speed bump at 100 miles per hour. And I probably wouldn't do it a week before earnings, unless you could plan to close early. I'm Boozy. Earnings are May 10th. Let's just analyze it because, well, bell's about to open. Let's look at Boozy after the bell opens. I want to keep going through stuff. Problem is earnings is coming up, and all these stocks are too high priced. I need to do some stock splits. Get their average prices down. Let's see. CRISPR, I think, was too high. Yeah. What did we almost open today? We almost opened. What was the stock that we almost opened today? PACB or something, right? Pacific Biosciences. What's going on there? That's funny. I don't know if you guys saw that. It was putting the earnings line in the wrong place. May 5th. Earning. Really want to open a trade today. Anyway. Looks like I'm not going to put in any trades today. Opening bell has already started. I don't know why I didn't hear it. Usually when I got Tastyworks going, I hear the opening bell. Guess you guys are going to see my accounts today. That's okay. By the way, I have different accounts for different strategies. That's why you see me have multiple accounts. I'm not running the wheel in each one and then just talking about how great I did in the wheel in one of my 4 wheel accounts. I have different accounts for different strategies. That way I don't have to do much math to track how successful each strategy is working. Okay. So here, I'll just walk you guys through it. Since I didn't open any positions, I didn't find anything before the bell opens. I usually don't like to open positions after the bell opens. So you can see here, I own some Riot shares. Those probably got put to me. Riot, I did a really fun one. When Riot spiked up in price, I sold 9 deep out of the money ones, and then I used that to sell 1 at the money, just in case. Basically, the 9 contracts paid for 100 shares, or I was going to get something like a 26% return by selling at the money if Riot stayed up. It didn't stay up, so I got the 100 shares. But because I sold 9 contracts at such a high premium back then, it paid for my 100 shares. So these 100 shares of Riot you see in my account are basically free after 1 month of trading 9 contracts on it. And so now I'm just going to look at managing the contracts. So first thing I want to do is I want to sort by days to expiration, see if I want to do anything. Here you can see I have Eno. This is a loser for me. I made some premium, and then it got put to me, and now I'm turning around and I'm selling the calls to try and climb my way out of it. But it's just so far away from the trade price that probably I'll take a loss on that eventually. Those happen. Hillian was another loser for me. They didn't get the contract. Oh no, something else happened on Hillian. I was thinking of a different company just now. I was thinking about Workspace. Workspace, I knew about the contract, but before they lost the contract to Oshkosh. Not because I knew they were going to lose the contract, but I don't trade the wheel around catalysts. I don't trade around major events, and I don't trade it around earnings, because then you get stuck with shares. That's not our goal. Alien is just one of the companies that just didn't make it. I've got earnings on that. That's 30 days, 4 days out. Okay, cool. These are super low, so I can try and roll these for some credit. Yeah, 74 cents at 18 days. I will try and do that. Unlikely to get filled at that rate. Seems too high. Roll expiration. Again, $75 at almost a month out. We hope those get some fill. So this is me rolling positions, by the way, if you're watching. What you're looking for is if the trade price that you got it for and the bid price is a big enough difference, then you can either close it early or you can roll it forward for more credit. And these I'm just trying to roll forward for more credit because I'm stuck with those shares. All right, Mara. I have an active contract on Mara. Ooh, 11 days to go. I sold it at 322. By the way, Marilyn, if you're still there, you should pay attention to this. So 20 days ago, I sold the Mara for $3.22, selling the $33 put. It's gone up a lot since then in price, I know. So now it's trading at 15 cents. Trading at 15 cents, so I can close this early, or I could let it ride for another 11 days to try and get the full value. So the question is, do I want to? Well, there's a big spread between the bid and the ask. So I got to ask myself, do I want to wait 11 days to make $30, or do I want to close this early? Well, what is 3.22? I did that backwards. No, it's 4%. Okay. So here you're going to see me try and close this early. I'm going to put in closed profit percentage at 90% and see what that comes out to. It comes out at 22 cents. Okay. I'm going to cancel that. I'm going to try and do 95%. Because we want to close this early, and especially if we close this 11 days early, that would be great. I'd be getting 95% max profit, be closing 11 days early. That is a big win if we get that to go through. Did you follow that, Marilyn? Let me know if you had any questions on that. So you can see Mara is a big winner for me. Rick Phillips asked, what are some of your other strategies? I was using different accounts to try different strategies. One account I was doing, I was buying the shares and then selling the leap and getting like 20-30% discount on the stock. I stopped doing that because, well, I probably should retest that one because I did it too soon after COVID. So a lot of those stocks rebounded. They hit my max profit really quickly. I think all the results from that are just skewed. And now I'm stuck waiting a year or two for those contracts to play out for me to get max profit. I could close early and get like half the profit. I don't know. It's just kind of a messy. I don't really like that strategy compared to the wheel. So I'm discontinuing that. My other strategy is just coffee can, buy and hold great companies long time. Don't manage them, don't trade them, just buy them and hold them forever. I'm doing that with Tesla. And then I'm going to start doing long short positions like hedge funds do. Try and get 3 times the upside versus your cost versus down. Cool. All right. So I already did the stuff on Mara. I know there's a bit of a time delay, Marilyn, but if you had any questions on trading Mara or how I rolled it, I'm happy to explain that. Tilray, I sold the put only 3 days ago. Looks like it's moving against me. Stock has come down since then. And, whoa, $2 down today. Tilray is taking a dump. So I'm probably going to own some cannabis stocks here soon. That's okay. We only opened up one of them. And that happens sometimes. Sometimes you own stocks. That's the great thing about the wheel. You're not really losing money. You're just buying stocks at a discount. It's not the end of the world. I don't lose any sleep over this. Right? Tilray, I just want to point this out to you guys. Let's open up Tilray. Let's open up the chart, right? So it was at 18. This looks horrific for these long candles, but it's only $1. Come on, Tastyworks. Anyway, so Tilray was at a higher amount. It's come down $2 today. It's approaching my put of 1750. My break even is like 1670-ish, and I'm not worried at all because this is the strategy. You know, you're buying shares sometimes. It is not a big deal to worry about. And why won't Tastyworks give me the 1 month chart? It gives me the 1 year chart. It gives me the 1 day chart. Why will you not give me the 1 month chart, Mr. Tastyworks? I'm trying to do a live stream. Anyway, I forget what I opened Tilray at, what the stock price was, but it's come down a lot, and I'm not worried about it because I'm going to own some cannabis shares. Tilray's going to merge with Afia, however you say it. They're going to be the biggest cannabis producer in Canada and maybe North America, and we're going to make a lot of money on that stock someday. And I'm getting it at a discount, whereas if I bought it, what is this, 3 days ago, I would have bought at the height. I would have bought at the peak. I'm getting a big discount. Anyway, moving on. GRWG, they are a hydroponic supply store, so they're in the cannabis sector, but they're selling shovels, not pots. You get what I mean? They're gold, like, you could either dig for the gold or you could sell the shovels. They like to sell the shovels. I opened this 5 days ago. I can close it early for 70, I'm trying to do the math in my head here, like 60% max profit. Should have took some flu medicine. 76%, 77 max profit after 5 days of being open. Yes, we are going to close. I think I did 2 of these and I closed one early already. Oh, that bid-ask spread is crazy though. Yeah, that's one thing you gotta pay attention to on options versus stocks. Is the bid-asks are crazy because every option chain is its own chain, its own open interest, its own traders. So the bid-ask can be super, super crazy. But hey, if we can close this for 52 cents and get 77% of our max profit after 5 days, we are going to do that. We are not going to wait for this to play out. Okay, so we're going to put that in. I don't think that's going to fill, but hey, if it does, it does, and that'd be great. Here we have Space. I own a bunch of shares of them, so I kind of stopped trading options on them. You'll find that's what happened to me in the last couple months. Is I went from just trading wheels to actually buying and holding shares on these companies intentionally. Not like the wheel got stuck to me, but I intentionally went long on these, and so now I'm looking for stuff outside of the companies that I regularly trade. I did close this early for 60-ish% after 5 days. That sounds good. 0.65 divided by 1.34. 50%. Yep, my math is terrible tonight. 50% after 5 days, even though the stock is going down. Doesn't make sense to me. It's just a crazy bid-ask spread. But hey, we'll try it. Kodak, this company is the bane of my existence. I tried to do something fancy. This is the only thing in my wheel account that was not a wheel. I tried to get fancy on Kodak and it got stuck to me. And it was not a wheel. I tried to do something extra fancy on that one. And then Riot, I have 100 shares. I'm just going to hold on to it. Not going to try and exit those or sell cover calls on those. Not sure why. Not that bullish on Riot's future. Actually, excuse me, Marilyn, if you don't know, Riot just made a big acquisition of another facility that mostly does, I believe, third-party mining. So they mine on other people's behalf. People invest in that facility, and they basically operate their hardware for them. Riot bought the whole facility, the whole operation, the whole company, which is good because they're still going to get access to that client database. They're going to get the proceeds from mining for other people, so they're going to get the fees for that. But then they also get all that cheap electricity and all the space to to hold more equipment. So that's a good long-term prospect for Riot on that one. Oh, I said we were going to give out some Discord invites, and nobody reminded me after the bell opened. So let's go ahead and do this again. Sorry about that. If you're still listening, get ready for your Discord invite here in a second. And thank you guys for being live with me at Fox with Stocks. And there is your Discord invite for those of you that were waiting for it. Sorry, I forgot to do it, I guess 5 minutes ago. There you go, guys. Make sure you join. That link will expire in 30 minutes. Those of you guys watching the replay, you must attend a live event to try and get a shot at those free Discord invites. Make sure you read our rules. Click on the welcome and rules after you join the Discord. You don't want to lose that privilege of being in our Discord group and then having to try and get another invite. All right, Mars, Space, Tesla, GRWG, Tilray, DraftKings. I think a bunch of those had earnings. I'm going to write down my earnings on my watch list. May 21st. I can trade DraftKings without touching earnings, but I don't know if there's enough profit in them. 6% at the money. There's not enough profit in DraftKings. I really want to do DraftKings, but they don't have enough. My PayPal link says this organization's page is broken. That's weird because somebody used it the other day, and I appreciate you for trying to tip, David. Let me try and figure that out. What the heck's going on with that? Excuse me, guys, while I check out why my PayPal link isn't working. He's totally right. It says this organization's page is broken. Well, that's annoying. Well, thank you for letting me know. I will definitely take a look at that. And I appreciate you guys trying to donate, trying to tip. I'm trying to give you guys the best advice I can, and I appreciate it. Just hold on to your wallets. I'll try and get that fixed tomorrow. And if you're in the Discord group, I'll send you a message. You send me a message. And then once that's fixed, you guys can send me a tip. I appreciate it. Don't know why it's down. I have no idea why it's down. All right. It is 9:47. We got 13 more minutes to go on the Fox with Stocks Live Trading and Training. If you guys have any more questions or any more stocks you want me to look at, let me know. I think, we were going to do Voozy. We're going to do Voozy just for fun from Marcine. I don't know if Marcine is a male or female name. I'm sorry. I don't know if I'm saying it right. We're going to look at Voozy just for funzy, even though their earnings are May 10th. All right, so if we went 39 days out, so that's over a week over a month. A week over a month. I think everything is weeks now, weeks and months. Right? If we look at the money, we can get $3.40 for $27 share, which is a nice, fat, juicy 12.5%. I got to remember that's 39 days, not 30 days. Okay, so that means that we can find some good premium in here. We know that this is a good premium company. And if I look for about 5%, here, I'm going to go ahead and do the delta strategy that some people like to do, because I don't think I can do pop on this column. If we look at the delta, come down here to the 22. That's how a lot of people trade. Look at delta. What's the delta? And we take 140 on the 22. We're going to get 6.3% on 39 days. That's exactly where we want to be. We get a pop of 72%. What is our break even? Our break even is 2060, and today's share is 27.78. That gives us a break even percentage of 26%. The numbers are looking good. Let's go ahead and take a look at what does this company do, because we like, I mean, everything else is in line, right, in terms of just making a trade. But is this a company that we want to touch? Because I have a saying, and I hope it's not too offensive, but I don't touch cancer companies. I don't mean companies that deal with cancer. I mean companies that have cancer in their financials. All right, Vuzix Corporation designs, manufactures, markets, and sells augmented reality wearable display and computing devices for consumer and enterprise markets in North America, blah, blah, blah. 3 types, smart glasses, interesting, they do it for enterprise, industrial, commercial, and medical, not gaming. I was thinking AR, I was thinking gaming, but they do it for enterprise, industrial, commercial, and medical. Cool. Who brought this company up? It was Marcin. Marcin, have you ever used their product? Do you have any insight into the quality of their product? Is this like related to some work that you do? Because this is actually starting to get kind of interesting. Okay, so I kind of like what this company is doing. It's in a good growing space. VR and AR is going to be growing for the next, I don't know, 5, 20 years, whatever. I've never heard of this company. I have an Oculus Rift myself. I love to play Beat Saber. I like Robo Recall. I wish they'd come out with a sequel to that or made it more replayable. It's not a super replayable game. Institutional ownership is a little low. Insider ownership is 10%. And they've still got some reason to go make some money. Revenue quarter over quarter is fantastic, 116%. Market cap is $1.8 billion. I don't know what that is in this space in relation to other companies. I know Oculus is owned by Facebook, so they're the big game in town. But they're mostly, I thought, focused on gaming and dating. Facebook wants to use it for dating. Oh, I like this. Do I? No, it's a 27. It's too far ago. Too long ago. All the insiders have been buying. No insiders have been selling, but that was last year during the crash. So good on them. Smart. Buying up their own company. Corp Intel was an investor. They were a 10% owner, and then they dumped the shares at $11.51. They got out of it. $57 million. That was January, so very recently. That's not a good sign. It's not a terrible sign. I mean, not the same as a CEO or CFO selling. These companies have their own priorities, so they have to sell at some point to make money. That's how they make their money. But it's nicer when we don't see that. Debt ratio, did I do that wrong? No, I did that right. They've only got 7% liability to assets, so they are very well funded as they continue to grow and develop their hardware. Of course, technology, hardware, software does take a lot of money, and their cash on hand is actually not that great, but they have plenty of room for debt. But they're losing $4 million a quarter, and they've got $36 million, so we take 36 divided by 4. We have 9 quarters, which is just enough. I like to see 8 or more quarters. 4 is okay. I mean, not okay. It's kind of scary, but 8 quarters is fine. So this company has enough cash. One thing to look at when you're looking at the total assets, also come up and look at this goodwill and intangible assets and see if it makes sense. If it's if it's overpriced and overvalued, that's just brand value, and brand value could change in a heartbeat. Like if you're looking at like purses and bags and shoes or retail, a lot of that intangible value, it's just brand value, and you got to take it with a grain of salt. You got to discount it or something. So don't take when you look at total assets and you see high intangible, think about what that company actually owns. Is it actually a patent, or is it just brand value? Brand value is wishy-washy. Wishy-washy math. Vuzi, I like this Vuzi. Let's go. I want to see a product. I want to see their website. If I type in Vuzi, all I get is stock sites. I don't get their site right away. They're on the first page still. Marcine, are you still there? I want you to tell me about Boozy. We're looking up Boozy for you. I don't know if Marcine left. Oh, so these guys are making like Google-esque AR type stuff. And the future is here. This stuff would have looked crazy in the 80s. I mean, this is what the 80s was promising, this type of stuff, and now we're finally getting it. Remote support and teleconferencing through your face with the Vuzix smart glasses. I mean, this is basically Google Smart Glass, but not. So we have to think about why Google Smart Glass failed and why is this going to be successful if we're going to hold this long term. You heard a lot of great things about it. That's interesting. I want to know, I would love for you to just tell me more about that. Did you hear about people who were using it in work? Were they just using it for fun? Was it just a demo? So I'd be really interested to know who's using this in their job. If this, if this came, I could see this becoming popular, especially like medical or something, and doctors, and I could definitely see this, the future of this type of stuff. Just the question is, are we 1 year out, or are we 10 years out? It's really nice when you're in tech and you're 1 or 5 years out. When you're 10 years out, companies go broke before they get there. So what do? See-through waveguide optics, so they got a display in your face that's 854 by 480. Brightness of something. 24-bit color. 8-core processor. It's kind of crazy that we can fit all that in a pair of glasses now. Runs on Android, so you got your smartphone on your face. Has USB connectivity, has Wi-Fi, has Bluetooth, has a 12.8 megapixel camera for stills, 4K 30 frames per second video. That's amazing, actually. Integrated speakers, 97 decibels. I don't know how loud that really is. It's also right next to your ear, so it should be loud enough, I'm sure. External batteries you can hot swap. 2 to 12 hours of operation. Okay, so basically you're saying 2 hours of actually using it. GPS. Yeah, bosses can track where everyone's going. Oh, Marcus has some good info. From my memory, Microsoft won a large contract with the government, and Microsoft is using Vuzix technology. That is awesome. Let's check the news. Yep, Bhaskar asked to calculate the ROI. 1 second. Let me get the news for this. Partners with TechC to bring smart glasses somewhere. Public offering. Closed public offering. I'm not seeing anything related to Microsoft. That doesn't mean you're wrong. It just means I'm not finding it yet. Hold on just a second, Bhaskar, and we'll get to you. Especially if I'm about to open a trade on Vuzix. Well, I see that they partnered with TechC. I don't see anything about Microsoft. And if they, sometimes you get these tech companies and they say they're partnering, and that just means they sent them a free demo or something, and they actually use it. All right, Bhaskar. So I'm going to go ahead and just run this one. I think. I don't know if the price changed on me. Just a second here. Too far back. Okay. So. Look up Microsoft News, Bhaskar. Okay. I'm just afraid that if we search Microsoft, then we're going to we're going to get tons of news. Okay, let's try both words, Microsoft and Vuzix. Blah, blah, blah. Shiba, Lady Hourglass about businesses. Revenue is growing fivefold over 4 years. Hey man, hey Marcin, thank you for sharing the stock with us. I'm getting more and more interested in this. Okay, blah, blah, blah. 10-year contract, $22 billion, military-grade AR headsets to the Army. Are they making their own, or are they using Vuzix? See, here it says they're using Microsoft's HoloLens headset. Still reading up on this. 1 second, guys. Oh, great. People with Vuzix hardware using Clearview AI can recognize 3 billion people's faces. That's disgusting. Okay, so I'm not seeing that Microsoft is using them. I'm seeing that Microsoft and Vuzix are competitors, that Microsoft is using HoloLens, and that Vuzix also wants to sell their headsets to the military. That's what I'm seeing. I'm not seeing that they're working together. I see that they're working against each other. Yeah, I tried typing them together. I still didn't see any news of a partnership. I think here's the thing, if Vuzix partnered with and sold a bunch to Microsoft, I'm pretty sure it would be in the Vuzix news section, big and bold. What I'm reading is that they're competing now, that Microsoft did get the government contract and then it's using HoloLens, and that Vuzix it's just like mentioned in the article as another company that makes headsets. But still, I think this company, as they were saying, that the growth was like fivefold over 4 years in terms of revenue. I think this might be a good long-term hold. Let me check the chart again. Ooh, we are at an all-time high-ish range. I'd really like to get down to 23, 24. But our break-even, actually if we do this, our break-even is 20. So you know what? I'm going to go ahead and do this. I'm going to put this in. And our spread is a little wide, so I'll tell you what I do sometimes. You guys watching me. Here you see the natural, here you see the mid. If you go at mid, you almost never get filled. But if you go between the net and the mid, so you go to the mid-mid, the mid between the net and the mid, sometimes you get filled, and I might squeeze out an extra $6 per contract. And I want to have, let's go 2 contracts on this one. I want to tie up $4,000 worth of cash. Just checking my numbers again, 73% pop. If we get $1.56 at the 22, we're getting a 7% return. That's fantastic. Oh, it's 39 days, so it's good. It's not fantastic, it's great. All right, we're putting this in, hoping to get some fill. So we have a working order on Vuzi. Thank you for the details. Mr. Marcus, I won't share them, but thank you. All right, and I'm going to post this into our Discord group. This is why you want to be a part of the Discord group, so that you get to know when I'm doing trades. We're doing some of these live, but so I just did a screenshot of the trade that I just did. Just put in. Hopefully we get filled. No, the bid in the ask just got lowered. We'll let it sit for a few minutes. All right, it is 10:04. Tempted to keep going with you guys. We got 21 people in the chat. Does anybody need an invite to the Discord channel? Did everyone get one that wanted one? You guys have stuck with me for an hour and a half now. When you are done, can you review? What do you mean, Marilyn? Review what? Good job, Basker. Basker got filled at $1.50. I tried to squeeze out that extra $6, and Basker undercut me. That's the problem. That's the problem with doing it live. Basker's gonna undercut you. Vizier. Yeah, I'll take a look at Vizier. I got filled at 155. Did I get both of them filled? Take that, Basker. I got $10 extra on you. I'm just having fun, man. Yeah, let me get that. Let me get the last invites, guys, okay? Hold on 1 second. And then we'll take a look at another stock. We'll go late tonight. I don't mind. But this will be the last Discord invite for today. Thank you, Basker. Yeah, always glad when I get a little bit of a one-up on someone. I don't know, I get some competitive trading stocks. All right. Vizier. There we go. There's my Finance Yahoo. I don't think it's Vizier. Are you talking about Boozy still? Yeah. I don't know what you're talking about, Marilyn. We did Boozy. I don't know about Vizier. Vizier's private. Hey, if you guys have any more stocks you guys want me to look at, I'm totally down to look at some more. I'm tired, but I've got another good 15, 20 minutes in me. Well, Basker, we already did it. It's pretty simple, man. Hey, let me get the slide for you. I'm not trying to be condescending. I know. Hey, let me back up from my from what might be construed as condescending. But if you guys are new to this and you're confused, guess what? So was I for the entire first month. Okay, so was I for the entire first month. I had to watch lots of YouTube videos and read books and audiobooks and bust out a calculator and a spreadsheet and just practice until I got it. So, Basker, the ROI is you're probably just doing it backwards. You're probably thinking you take 26 and divide it by $1.30. It's the opposite. Okay? You take the premium, you take the premium, which in our Virgin Galactic example was $1.30, and then you divide it by the strike, not by the stock price, but by the strike that you're selling. So you'll see you get a 5%. Let me show you what it looks like in Tastyworks, because I think that's a little bit more clear. Okay, you with me, Basker? We're going to take, here's our premium. The premium is the bid. Maybe that's the problem, because you don't see anything that says premium. Premium is how much you're going to try and sell it for. So we can always calculate at the bid, because you can get filled on that right away. So we take $1.45, and we're looking at the strike price. Stock price is $27.80, but the strike price is $22. So our premium and our and our strike. Our premium and our strike are right next to each other. So you take $1.45 divided by $22. And that's our ROI. And it's shown as decimal, right? So this is 0.065. That's 6.5%. 6.5%. That's what we got. Okay? So that's how you calculate the ROI. All right, Workhorse. I used to like trading them a lot, so let's check them out first. And then we'll go to Applied Graphene. Graphene is cool technology. Okay, here's the problem with Workhorse. Earnings come out May 5th. The best you can do on this is 18 days before hitting earnings. My throat's going to go. I can only do a couple more of these. Baxter, no. The minimum is whatever minimum you want. Whatever you're comfortable with, and also whatever the market will give you. Okay, last year I got 5% every month, and the market was giving it. This month, maybe it's only 4%. Okay, I'm happy to do it. It's more important to do a good stock for 4% than to do a bad stock at 5 or 6%. So, be picky about your companies. Hey, Workhorse, I like Workhorse, but let's wait. What is this? Let's wait 23, 25 days before we go and do a Workhorse. APGMF has no options. No worries. Happens to me all the time, Chester. Happens to me all the time. David, just for you, just because you asked, and there's no one else on the line, let's go ahead and just look at the return on Workhorse, even though I don't think we'll do it. 97 cents at the money, $12.50, but it's dropping. That is 7% at the money. That's not very high. It's 7% at the money means you're not going to get much out of the money at 5%. But it's barely good enough. So let's take a look if we can find a 5%er. See, this should be 2%, right? 0.21 divided by 10. My math is bad tonight. So I need to get 40 cents somewhere. 0.41 by 11, that's only 3.5. 0.56 by 1150. So there's our number. We need to be at 1150. Let me clear all those. There's where we can get close to 5%. Oh, sorry, this is 18 days. We can cut that in half. I'm sorry. Bad math on Buddy. Bad math on Buddy. He's tired. Let's go back down. Let's clear that. Let's look at 32 cents. Divided by 10.5. There's 3% in 18 days, so that's like 6% return. So this would be sexy if it's worth doing. Let's look at our break-even. Our break-even, you look at this is 1,000, you just add a couple decimals to it. Our break-even is $10.18. And then we divide it by today's trading price, $12.42. Then invert it. That's why it's confusing. You got to invert it. Okay, so if we sold this, David, you still with me? I hope you are. You came in, left. I didn't answer your question, and you left. I'm going to feel bad. All right, David. If we sold the 1050 put before earnings April 30th, we'll get a 3% return, but only in 18 days. So it's like getting a 6% return in 30 days. And we'll have 18% downside protection. Now, if you want more downside protection and you don't mind a lower return, you can slide it up to the $10 instead of the $10.50. Okay? Now, if we look at the pop, we're at 76%. That means we're right on target. It means you're very likely to be successful with this. But remember, okay, very important, everyone, all 18 people that stuck with me and listen, you're going to get some good advice right now. This pop is based purely on the technical analysis, the numbers of the stocks and the options. It has nothing to do with the fundamentals. It has nothing to do with the news. It has nothing to do with the catalyst. This pop could be 20% higher or lower based on news that does not get calculated in that. So if you know, for example, if you somehow know that Workhorse has really good news coming out, this 75% pop might be 95% pop. And if you know they've got bad news coming out, that 75% probability of profit might be worthless. It might be 10% probability of profit. This is purely the math behind the options and the trading price, okay? So that's actually a good thing. It means that people like us who take the time to go do the fundamental research, we have an advantage over the people that just look at pop. They just jump in and they go, oh, pop 70, pop 80, that's good. Well, you know more than them because you did the analysis. You know the news and the catalyst and the fundamentals. So that pop, you can adjust for yourself and squeeze out more profit or avoid bad situations. So I'm not going to do this, I don't think, because earnings is coming up. Workhorse lost the Oshkosh. Actually, Workhorse is a good company, though. They got drone technology and they got drone patents that, as long as those patents hold, other companies have to buy or license their patents to launch drones from moving vehicles. I thought that was kind of crazy that they got the patent for that. You know what the heck, let's go ahead and put this in. 32 cents, 36 cents. I'm going to try and get 33 cents because I'm not super excited about this. Max loss is 1,000. I don't want to go too heavy on this. Let's just do two of these. Because, you know, here's the problem with doing 18 days. Even on 2 contracts, I'm only making $60 and I'm taking a bunch of risk. You know, coming up close to earnings. Whereas if we were a month out, we'd at least be making, you know, a couple $100 for the same amount of capital being tied up. It'll be tied up longer theoretically. Yeah, I'm not going to break my stance. I'm not going to do it. This is why I stopped doing weeklies, because some people like the weeklies. They think they're generating more percentage, which is true as long as everything goes right. But you're really taking on the same amount of downside risk as a monthly, and then you don't have enough downside protection and enough ROI to make it work. Basker asked, and this will be my last question of the night. My throat's starting to go. Sorry, guys. My last question of the night. Once it is assigned, if is really the question, if it is assigned, how far you go for selling calls? I'm not sure if that meant strike or time. So I usually stick to 30, 45, or 60 days, and I'll show you guys something. If you look at the calendar here on Tastyworks, it'll show you where the implied volatility is. So you can see 107, 103, 109, 110, 107, 107, 105, 110, right? So I like to look at the 30, 45, 60, and then I look at those and I look for the highest implied volatility. So if the highest implied volatility is 45, then I'll take the 45 because you're just going to get more money for your time. That's basically what implied volatility means for us as wheel operators, as wheelers. Implied volatility is more money for time. So, for example, you know, let's pretend earnings didn't exist here. I would do the 25-day maybe instead of the 32-day because there's 3% more implied volatility. Okay? And if I had the choice, let's say I didn't have that choice. If the choice is between the 32 and the 39, I'll take the 32 because it's shorter time, same implied volatility. It doesn't really work out. Like, you'll get more value than the 39, but why bother? I don't know. I mean, you just look at it, and you figure out how much money you want to make. You look at your break-even. You got to make it all work together. It's like a puzzle. And the same thing with the covered calls. If you're selling the covered call, you're looking at figuring out how to make that puzzle work in a way that when you're doing the covered calls, your best goal is to try and get the best combination of ROI, appreciation, so that's actually the strike above your break-even, and then making sure that whatever you settle at is above your break-even. If you can't get to your break-even, then you have to make a judgment call. If you don't like the company anymore, sometimes it's better to just dump it and move on. If you still like the company, you think it's a good company, you can either hold the shares and wait for the stocks to go up in price and then sell back out, or you can sell covered calls halfway or whatever between your break-even and then just keep rolling it up if you don't get it. Anyway, that was my last question for the night. I'm 17 minutes over. Marilyn made me break it. I don't have minimum IV. We traded IOW. I don't know what IOW is. What is IOW? Anyway, implied volatility is a stock-by-stock basis, but usually probably less than 50% implied volatility, you're probably not going to get enough to make it worthwhile unless you really want the stock. You can run the wheel with full intention of just getting the stock. Like, I mean, I guess in a way you could say you're not running the wheel, but you can sell covered puts with just the intention of owning the stock, and so you're just collecting discount, you're just collecting premium until you get the stock. Anyway, Guys, I'm sorry my PayPal button isn't working. I'm going to get that fixed. You guys should have the Discord invite. Please do consider tipping me. I do put a lot of work into this, but also you get a lot of value out of this. This strategy made me $18,000 last year, basically working an hour a day on my computer in Bali. You could be in the Bahamas. You're going to get a ton of value out of this. Be sure to give back, you know, in some ways, whatever ways you can. I understand if you can't afford it right now. Take it, run it for a month, make some money, and then give some back, because I'm just doing it for tips right now. And I will get that PayPal link fixed. Join me in Discord. Sorry my voice is going. We're already 20 minutes over. Thank you guys. Have a wonderful night. And check the referral links and other things in the description below.